Okay, I want to go through this problem. This is the serial problem from Chapter 2. It's just some practice on making journal entries. And that's mainly what I want to do, that and posting to the ledger. So here's the items. Here's the accounts we have to start with, but there's going to be some accounts that are needed later on. And then we have the transactions for October and November. The first journal entry. This guy invested $49,000 in cash, $29,000 in a computer system, and $8,000 of office equipment in exchange for common stock. So we have cash. It's going to be a $49,000 debit because cash is an asset. We're increasing cash. Cash has a normal debit balance, so we're going to debit cash. Computer systems also an asset. We're going to increase that. We're getting computer equipment. We're adding to it. And then we have office equipment. Also an asset. So we're going to debit that. In exchange for common stock. Common stock is an equity account. We're increasing it. So we're going to be crediting that account to increase it. Common stock, equity accounts. Common stock, retained earnings, and revenues have credit balances. So let's add them up. 49,000 plus 29,000 plus 8,000. You get 86,000. 49, 29, 8. And that should be okay. Let's see. We paid $3,280 for 4 months rent. So since we're paying for this in advance, we're not actually incurring the rent expense right now. The expense will be incurred as we occupy those spaces. So we're going to use prepaid rent as it's an asset with a value of $3,280. As we go through the next several months, next 4 months, we will use that up, and we actually paid for it, so it's cash. In this case, cash is being credited. Two assets here. One asset being increased, one asset being decreased. You always increase an asset with a debit entry, decrease an asset with a credit entry. We purchased $1,410 worth of computer supplies on credit. So we have computer supplies, $1,410, and since we did it on credit, that means we didn't pay for it. That would be accounts payable. Make sure you get accounts payable. Accounts payable is a liability. Liabilities are increased with credits. We increased assets on the left side of the equation, increased liabilities on the right side of the equation, and it balances. You notice that all my entries show the debits first, then the credits. And they also show that any account that's being credited, the title is being indented to the right a little bit. Let's see here. The company paid $2,040 in cash for 1 year's premium on our property and liability insurance policy. So this is going to be prepaid insurance. Again, as we go through the year, we'll use some of that up and we'll credit this account and debit the expense account. We paid for it in cash. So we billed Easy Leasing $5,500 for services performed installing a new web server. So this is, let's try revenue. Computer services revenue sounds good. That would be the number of thing we want, but we billed them for this. That means we didn't collect the money, so we must have billed them on accounts receivable. Revenue has a normal credit balance. It'd be an increase with a credit entry. Accounts receivable is an asset with a normal debit balance, and this being increased with a debit entry. They paid $1,410 for the computer supplies they purchased on October the 3rd. Well, If you go back to October the 3rd, it was a debit to computer supplies and a credit to accounts payable. So since we're paying that off, we're going to debit accounts payable, and we're going to credit cash because we're paying this off. This is a liability being decreased on the right side of the equation. We decrease it with a debit. Cash is on the left side of the equation, and asset being decreased with a credit entry. The company hired Lynn Addy as a part-time assistant. They're hiring this person is a contract, but it is not a financial transaction. No journal entry required until we actually have to record the wages. Company billed Easy Listening for another $2,100 for services performed. Oops. Accounts receivable. Again, debit the receivable and asset, increasing the asset side of the equation, the left side of the equation. Credit the revenue, increasing the right side of the equation through the equity account. The company received $5,000 cash from Easy Listening, so cash is going to be debited and as partial payment on its account. Accounts receivable. The company paid $800 cash to repair the computer equipment that was damaged when moving it. So this looks like repairs to me. An expense is almost always debited. There's a couple of instances where you credit them, but those are special instances. It says we paid $8,800 cash. I'm sorry. So cash is going down. This is an equity account, but this is one of those equity accounts that the bigger it gets, the more it reduces overall equity. It has a debit balance. Expenses have debit balances. Assets have debit balances. So we're increasing this expense, which decreases equity, and we're decreasing cash. So the left side of the equation gets decreased, right side of the equation gets decreased. Company paid $1703 for advertisements, so this is advertising. Should be starting to get the hang of this. Assets going down. This is another expense, so just like the one before it, debit the expense, credit cash, debit the expense, credit cash. We received cash, so cash is going up from Easy Listening on its account, so that's receivables. The company billed another company, IFM, for $5,608 for services performed. Again, that's going to be receivables, debit for $5,608, and computer services revenue $5,608, just like one we did before. So now you're starting to see these things repeat. We debit the receivable, the asset, increasing the asset, and the left side of the equation, credit the equity account, the revenue account, increasing the right side of the equation. Company paid $1,005 for wages, so we're got wages expense, $1,015, sorry. We paid cash. Notice debits first, then the credits. The credits are always indented. Company paid $3,500 for a cash dividend. Dividends have a debit balance where they are always debited to increase them, which reduces equity. Paid $260 for cash for mileage expenses. Let's see if mileage is one of their expenses. Yes, it is. Debit the expense and credit sorry, had my cable hooked around my feet. Company received cash, so cash is going to be debited for 5633 for computer services performed. So we did revenue. We earned the revenue and got paid for it at the very same time. The company purchased computer supplies for cash, so computer supplies, increase one asset, decrease another asset. Billed the Gomez company, so that's going to be receivables again. They agreed to perform future services for Alex Engineering. No work's been performed, so this is not a transaction. We've agreed to do a transaction, but we haven't recorded a transaction yet. Company received 3408 in cash as partial payment on an October 28th bill, so that's going to be cash. And if you want to look at October the 28th, let's see if we can find it here. We billed them 5608, so accounts receivable. Company paid cash for miscellaneous expenses. Debit the expense, credit cash. Completed work and sent a bill to Alex Engineering. So, sent them a bill, we didn't collect it. Debit the receivable, credit the revenue. When we collect the money, we're going to debit cash and credit the receivable. We don't have to worry about the revenue. We already recorded that. Sent another bill for the past due amount of $2,200. Now they owe us $2,200. This is the second bill we're sending to them. Since we're not charging any interest, there's really no journal entry required on this one. This is just something we've already recorded in the past. Mileage expenses again. Debit the expense, credit cash. Paid for Lynn Addy's wages, so wages. Getting close. Paid $1,400 cash dividends. That should be good. Let's check our work. All those look good. Not complete yet. Now we need to post these to the ledger. And what I'm going to do is I'm going to take just a second. I'm going to pause this, and I'm going to enter these into a spreadsheet or something that I can use. Okay, I've made myself a spreadsheet that has all my info on it, so I can refer to it. And what we want to do is we want to record, we want to post each of these items one at a time. One at a time. So the first thing is a debit to the cash account of $49,000. So, we'll get the date right, October the 1st. Oh, return to the question here. Let's try that. October the 1st. is a debit of $49,000. Now the debit, so this balance here is $49,000. Can't tell that from by looking at the balance, but by looking at the account, you know that cash is an asset, has a normal debit balance. So I'm going to go to my spreadsheet. Let's see here. Here we go. And I'm going to go ahead and mark this one as done. The next one is computer equipment, $29,000. Oh. And the next one is office equipment of $8,000. And then common stock of $86,000. I'm just going to add these up. I'm just going to make sure that I've got the math right on this. 86,000, right. Credit to common stock on the first of 86,000. So you notice we have debit balances of 49, 8, and 29,000, and a credit balance of 86,000. And so this one is done. Always do it this way. Don't try to skip around. Don't try to find all the cash entries and then put them down. No, one at a time. And then after you get them done, in real life you would use the posting reference column. Let's make this a little bit smaller. Post reference column, and you would record the account number 101 here. Office equipment is 163. Computer equipment is 167. And common stock will be 301 or something like that, 307. You notice that assets always start with a 1, liabilities start with a 2. Common stock, retained earnings, dividends always start with a 3, revenues with a 4, and expenses with something higher than 4. So we're going to post the rest of them. Prepaid rent, debit on October the 2nd of $32.80. And a credit to cash. And you can see the balance went down in cash. It was a $49,000 balance, but we credited the account, so now my debt balance is less. This one's right. Computer supplies, we're going to debit this account on the 3rd for $14.10, and I'm not going to mark it yellow until we're done. Computer supplies on the 3rd. And again, you would use the account number there in real life, 126. You posted this where prepaid rent is. Prepaid rent is 131. Let me just go ahead and put that in. Alright, so we've got this one done. Accounts payable will start with a 2, 1410 on the 3rd. And a credit, 201. You put, that's the last thing you do is record that account number. Over here in the journal, you would put, there's a place to put another post reference column in the ledger, and you would put the page number that the journal entry came from. In this case, G1, General Journal, page 1. Make sure it's a credit. Yep. We're going to debit prepaid insurance on the 5th. For $2,040. That one's done except for the account number. cash is going to be account number 101, but we'll get that in a minute. Credit on the 5th for 2040. Okay, on the 6th, we're going to debit accounts receivable, 5,500. 6, debit accounts receivable. Computer services revenue will start with a 4 to credit on the 6 for 5,500. Account number 403. Oops. All right, we're going to, on the 8th of October, we're going to credit debit accounts payable for 1410. Notice the balance is now 0. And then on the 8th, we're going to credit cash for 1410. And you'll notice the way this happens is you just go down one at a time and make sure that you mark these things off one by one by one. Never try to skip around, because you will make an error every time. And I may have made an error. Maybe you've caught an error that I've made. But we could find out by running a trial balance. We take the ending balance of all these accounts and make a trial balance. We'd see where they stand. On the 12th of October, there's no journal entry needed here. I don't have to worry about that. On the 12th of October, we're going to debit accounts receivable 2,100. Account number 106. And we're going to credit the computer services for 2,100 on the 12th. $403. And when you look at this, I can look at this list, and I wouldn't have them highlighted in real life, but everywhere there's a number, I have posted that to the ledger, and that keeps me honest. That keeps me safe. If you do it another way and skip around, it's so easy to miss one. So easy. Please don't do that. Everybody tries it. Nobody lives to tell about it. We are debiting cash for 5,500 on the 15th. And then we're going to credit accounts receivable on the 15th for 5,500. So here you can see both entries on the same page here. These would not be on the same page in real life, but you're debiting cash, crediting accounts receivables. You can see that this balances. Account number 106. We're going to debit repairs expense computer for $800 on the 17th. Make sure that's right, $800. Account number 684. We're going to credit cash on the same date, the 17th, for $800. Oops. We're going to debit advertising expense for $17.03 on the 20th. That was account number 655. I just looked at it when I went by. And then we're going to credit cash for $17.03 on the 20th. All right. On the 22nd, we're going to debit cash for $2,100. Ooh, what was the date again? 22nd. That's right. We're going to credit accounts receivable on the 22nd. So you can see here that everybody's paid us everything they owed us on accounts receivable so far. Account number 106. All right. Let's go again here. We're going to debit accounts receivable on the 28th for $5608. We're going to credit computer services revenue on the 28th for $5608. So computer services revenue. There's your credit here, 5608, and your debit up here, 5608. Account number 403. Okay, we're going to debit wages expense on the 31st. Debit wages expense on the 31st for $10.15, 1015. I'm just going to make sure. 31st, 1015. I feel good about that. It's account number 623. We're going to credit cash on the 31st for $1,015. Oops. We have the debit down below. We need to credit up here. Let's get this better. We're going to debit dividends on the 31st for $3,500. Credit cash on the 31st. Was $3,500. I feel good about that. Here's the credit. Here's the debit. And it's account number 319. Cash is going to be credited. And I'm sorry I did that. I recorded one and didn't let you know that I recorded. Didn't make my mark here. I should have highlighted this and put the account number in before I moved on. Starting to get in a hurry. If you get in a hurry, you will make mistakes. Do not get in a hurry. Just take your time. Mileage expense on the 1st for $260. Credit cash. Oops. What was that account number? 676. Now we're going to credit cash on the 1st of November. Oh, shoot, man. We got to make sure I don't get anything. The 1st of November for $260. Make sure I got my amounts right. And it's a debit. And the date's right. So, I'm going to debit cash on the 2nd for $5,633. And I'm just going to check that number. Yep, looks good. Account number 101. Going to credit computer services revenue on the second. $5,633. $403. We are going to credit debit computer supplies on the 5th for $1,090. And that is account number 126. We're going to credit cash on the 5th for $1,090. Credit, debit, everything balances. Account number 101. All right. On the 8th, we're going to debit accounts receivable for 6468. The 8th. I'm going to double check that amount. 6468, right. And this is account number 106, I think. Computer services revenue. Let's look at this guy on the 8th, 6468. November the 8th. So 6468 credit, 6468 debit, and this is account number 403. No journal entry on the 13th. On the 18th, we're going to debit cash for $3,408. Make sure the amount. Yep. We're going to credit accounts receivable for $3,408 on the 18th. Account number 106. On the 22nd, we're going to debit miscellaneous expense for $160. That is on the 22nd. We're going to credit cash on the 22nd for $160. Oopsie daisy, too far. Whoops. We're going to debit accounts receivable on the 24th for $42.50. We're going to credit computer services revenue for $42.50 on the 24th. Yeah, see this right here. Yep. Let's make sure I did that right. $42.50, $42.50. Okay, this is account number. What's this? Account number 403. All right, going to take a pause here, and I'll come back. Okay, let's get the last three entries done. The first one is the $28,312 debit to mileage expense. Excuse me. Make sure that's right. That is account number 684, no, 676. And then we're going to credit cash. Record the credit to cash on the 28th for 312. We're going to credit debit wages expense 2030 on the 30th. Account 623. And let's do cash credit on the 30th. We're going to debit dividends on the 30th for $1,400. $319. And credit cash on the 30th of November for $1,400. Now, if you're still paying attention here, I want you to look at something. You notice that cash has ins and outs where we earned cash, people paid us. Not where we earned it, but where people paid us cash is a debit. Where we paid other people cash, that's a credit. Accounts receivable, where we billed somebody for services performed, is a debit. And where they paid us is a credit. If you see a debit to accounts receivable, you're probably going to see a credit to the revenue account. October the 6th here. October the 6th. Debit and credit. When you see a credit to accounts receivable, you're probably going to see a debit to cash. So $5,500 credit to accounts receivable. And this is on October the 15th, by the way. Nope. Where was that? 5,500. On the October the 15th was a debit to accounts cash and a credit to accounts receivable. So that's the sometimes I get going too fast and miss the date. So it's October the 15th, 5,500 credit to accounts receivable, debit to cash. So far we've only had debits to these accounts. We'll see some credits next in chapter 3. Accounts payable has debit and credits. But look at common stock, only a credit, dividends only debits, revenue only credits, expenses only debits. That's what we're seeing here. And that's pretty much the way transactions go. Revenues will only have credits, expenses will only have debits. Okay. Let's just check my work and see where all my mistakes are. Okay, I've got something this October the 22nd was not right. So I'm just going to go down. That was mileage expense, I think. No, miscellaneous expense, not on the 22nd. Oh, it was November the 22nd. So this here should be November the 22nd. And down here, mileage expense. No, not mileage, miscellaneous expense. All right, a couple other little errors I've got here, going through this thing too fast. October the 3rd, 1310. look on October the 3rd. That's how you can tell. See, I know this happened on October the 3rd. I know it's on this page of the journal, so I can find it. October the 3rd was 1410. Let's look and see where other things are. That looks all like the only one I've got. Anybody that caught that going through the first time, good on you. And that should do it. Okay, that looks great. Requirement 3 is a trial balance now. And this is so simple. All we're going to do is do the balances. You get the balance in cash. It's a $48,225. And I know it's a debit balance. Accounts receivable has a debit balance of $12,918. Computer supplies is an asset. It's going to have a debit balance. Computer supplies has a debit balance of $2,500. Prepaid insurance has a debit balance of $2040. Prepaid rent, a debit balance of $3280. I was trying to find a quick shortcut to get to the prior page. Office equipment, $8,000 debit balance. And if you have any question about how I know that's a debit balance, you need to go back and read chapter 1 again. Okay, computer equipment, it'll also be a debit balance of $29,000. Accounts payable, it's going to be a credit balance. Accounts payable is a zero balance. You can go ahead and put that in if you want. Most of the time you don't have to, but I like to put the zeros in. Common stock is going to have a credit balance, and I think what was that, 86,000? Common stock has a credit balance of 86,000. Dividends is going to have a debit balance of $4,900. Computer services revenue is going to have a credit balance. Revenue accounts have credit balances. $29,559. Oops. Wages expense is going to have a debit balance. $3,045. Advertising expense also going to have a debit balance. $1,703. Mileage expense will also be another debit balance. Sorry. $572. Miscellaneous expense with a balance of $160, but I'm going to check it to be sure. There was a debit balance of $160. Repairs expense, a debit balance of $800. And here's how we know if we were right. We are wrong somewhere because these do not balance. So what I'm going to do is I'm going to see what the difference is. And it's 1584. 1,584 difference. Let me just make sure. All these are debits. Credit, credit, debit, credit, debit, 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 debit. I'm going to check my numbers. That's all I can do. So I'm going to pause a second. I'll go back and check my numbers, and we'll see what we find. And right at the top, I figured out that I had not scrolled down. I had just looked at this and thought somehow or other thought this was my last number, 48,225. The balance in cash is 46,641. See what that difference is. 48,225 minus 46,641, and it is 1584. There's my bad error. So 46,641. My mistake. Those of you who caught that, good for you. And now my trial balance balances. If it doesn't balance, go find your error. Happened to be fairly easy in my case. Let's hope anyway. And the answer is complete and correct. That is a long problem. It took me 46 minutes or so while I talked to you about it. But I hope you understood a little bit more about how to create a good journal entry, how to formulate a good journal entry, how to post to the ledger. And I'm serious, post to the ledger one line at a time. First line, post it. Make sure you mark it. Second line, post it and mark it. And once you get it all posted, run a trial balance, make sure you're right. And if you're not right, find your errors. And that's all there is to it. Sorry for the length of this, but that's a pretty good solid problem.